Aya, and I'm from the Design Singapore Council. I'll be your event MC and the moderator for today. Thank you for taking your time to join in this webinar, Understanding Internationalization. The session is brought to you by Design Singapore Council, the National Agency for Design in Singapore, and is supported by Spire Research and Consulting. Before we proceed, I would like to highlight a few housekeeping rules. Should you encounter any technical issues, please reach out to our technical team through the Zoom chat function. We ask for your patience and understanding should conditions be less than perfect. During this webinar, your audio will be on mute. However, we welcome questions throughout the Zoom Q&A function. When posting a question, please state your name and your company. Now, please allow me to introduce our speaker today, Japneet Singh, Deputy CEO, Spire Research and Consulting, who will be sharing more about the benefits of expanding into a new market and how companies should go about through the process. So without further ado, I'll hand you over to Japneet, who will share more about it. So Japneet, please.
Thank you, Gaia. Good afternoon, everybody. Let me just share my screen very quickly. Okay. Once again, good afternoon, everybody. My name is Japneet. I represent a company called Spire Research and Consulting. I was approached by DSG to really talk about what are some of the opportunities that exist right now across Southeast Asia region, which is really a focus of my firm. I'll talk about that in just a minute. To give you my personal background, I have been in the research and consulting industry, working with mostly large multinational organizations as well as mid-sized firms and helping them grow in the Southeast Asia region, along with my team here at Spire. But interestingly, I previously come from the design industry as well. I used to be an architect. I worked as an architect. I'm trained as an architect, and I worked as an architect for about three years in India, which is where I come from. And then I moved to the Southeast Asia region and really sort of shifted more into a business angle. Okay, so what are we going to be talking about today? I'll start off and I'll talk a little bit about the introduction, and then we'll go into each of the countries a little bit in depth. And I wanted to share some numbers with you, really, that will paint a fairly good picture of what's happening in these organizations, in these markets. I then want to just quickly talk about some of the opportunities that are available for Singapore companies, in terms of grants and growth opportunities. And then we'll close off with a case study where I'd like to tell you a story about how my organizations help the design firm expand overseas. Okay, so Spire, as I mentioned, is primarily a market research or a research-based consulting company. We help our clients, most of which are multinational organizations, mid-sized companies, as well as government organizations. We basically help them assess the external environment that they operate in, identify opportunities for them, and then help them grow and expand into primarily Asia, but a lot of the focus of that is in Southeast Asia region. In terms of, maybe I'll quickly just rattle off some of the services that we offer. So market research is really the core of our business. We also provide internationalization support, feasibility studies, and we help bring companies together with potential partners. Okay, so as I mentioned, our focus primarily is Asia, and you will see in this map where sort of Spire operates. So along with our group, we cover pretty much all of the markets, all of the attractive markets, at least in Southeast Asia region, India, China, Korea, Japan, Taiwan as well. Okay, so we have had the opportunity to work with really cutting edge leading organizations across sectors. So as you can see from this slide here, a lot of the work that we've done is with really the industry leaders and very large, sophisticated organizations. So we've really had the opportunity to learn from them as we provide them with insights as well. And I'm happy to share some of those insights and some of those trends that these companies are seeing as we work with them. Okay, so let me start off with the question on why to expand. Now, Singapore is a very vibrant economy and a very vibrant market, but it is still rather small. And in terms of just population base, we're talking about less than 1% of ASEAN's total population being in Singapore. Despite the relatively high purchasing power, even apples to apples, Singapore is relatively a small market. So companies that are seeking to grow will sooner or later hit the boundaries of the market. And which is why it's very important for Singapore companies to start looking at the ASEAN market, where there's very little trades and duties and things like that, really to start looking at that as a region, as your playing ground. Now, the main motivation for why companies expand, and this is from the EIU survey that you're seeing. The biggest reason, of course, as I mentioned, is opening up of new markets for their products and services. Gaining market share is also one thing that is an important reason as well. The third reason, I think, is something that Singaporean companies can also relate to, which is just an increase in competition and a slowing down of demand domestically. Cost-effective production, cost-effective, or just lowering costs in terms of supplier costs or labor costs, and finding new talents. I mean, this is something that I think has become increasingly important and is very, very specific to Singapore. In the last year or so, we have seen a talent crunch that's happening in Singapore across various sectors. And if the talent can't come to the companies, then maybe it's time for the companies to start going to where the talent is. And we've seen this migration with some of the design companies as well, where they've shifted a lot of their base to overseas, to their overseas offices, and have started to cater to the regional clients from a more regional sort of a setup. And then there are various other reasons as well: R&D, acquiring brands, and sort of gaining access to new materials, or like I mentioned, new technology as well. Okay, so the last year has been rough, and it's not just for Singapore. I think it's been rough in general. But to talk about Singapore specifically, according to an SG Enterprise survey, there was a dip in the number of companies that actually went overseas. Quite a significant dip, but it didn't go to zero. So 38% lesser companies than 2019 ventured outside. Having said that, a survey also says that in the next 3 to 5 years, 87% of Singaporean businesses surveyed will be looking at expanding overseas. For the companies that are already existing or have already expanded in the region, we did see a contraction with a fairly large percentage. So 47% said that their business overseas has also slowed down. But more than half, or a little bit more than half, said that their business has either been stable or has continued to grow. So internationalization and expanding into markets is also a way of hedging your risks in times when there is an economic downturn or when there's a downturn in demand. We see the utilization of digital platforms becoming increasingly important. So as travel restrictions come in, virtual trade fairs or business matching events, as well as e-commerce platforms have become increasingly important. Challenges still remain. I think being able to physically expand, of course, is a challenge, but also there's a lot of pressure on cash and cash flow that's come in the last 1 year or so. But almost all companies that we have spoken with in Singapore and across the region, technology has been the way that they've been able to adapt to this. And we're quite pleasantly surprised that the technology gap that used to exist between Singaporean companies and, say, companies in Vietnam has to a very large extent closed and narrowed. And these companies have adopted digital means in a very, very successful way. Okay, so let's talk a little bit about what are the options that companies have when they're considering entering into a new market. The first one really is sort of plain and simple, exporting of services or exporting of products from the home country to these opportunistic markets. The second one takes the relationship a little bit more in depth. So that's when there's licensing, sharing of technology, sharing of brands, and that sort of falls under licensing and franchising. And this has been in the past a very successful way that Singaporean companies have moved into Malaysia, Indonesia, Thailand. The third area is strategic alliances and partnerships. And these could be joint ventures, but in a lot of cases they are not as involved as joint ventures, but they're strategic partnerships of conducting projects together or conducting certain business activities together. The fourth area, of course, is acquisitions in M&A. This is something that our parent company does quite a bit, bringing Japanese investors into the region. But this is when really, you're talking about equity ownership and changing or participating in a more meaningful way and in a more involved way with the companies that are already present in these markets. And of course, the third or the last one there is starting from scratch. So greenfield ventures, which basically is going at it pretty much on your own and really growing organically within these markets. Now, there are advantages and disadvantages to all of these. So if we start off with exporting, it's relatively easy to do, relatively low risk, but the degree of control that a company has in that market is very, very limited. One of the challenges about using exporting to grow on a more sustainable basis is really the inability to control the price at which your product gets offered. So, Singapore, compared to compared to the countries in the region, is more of a high cost producer, both for goods and services. So being cost competitive when you're directly exporting, not being able to tap into the low cost advantages of these markets, puts a lot of pressure on price, really, and it's difficult to be price competitive. Licensing and franchising sort of takes exporting to a more long-term sort of a perspective. So the costs can come down a little bit because some of the processing or some of the work can happen overseas, but also relatively quick to enter and quick to scale up in the market if you're going down the licensing and franchising way. Partnering and strategic alliance it's rather wide and it really depends from company to company, but costs get shared. That's an advantage. Some of the risk gets shared, and you're able to bring in local expertise, which is incredibly important in all of these markets. But also, there is some amount of capital investment involved, depending on how you're doing it. And of course, there is a risk of IP being misappropriately or inappropriately being used. And that, I think, remains a challenge because while all of these countries do have fairly good IP laws, the implementation is quite weak. So that is always a risk. Acquisition can be quick and sudden. It can take some time to find the right partners. And of course, it's a much higher risk, and it requires capital expenditure to happen upfront. But the level of control that you're able to get is a lot higher. So that's sort of the advantage, and you're able to hit the ground running, being able to control and capitalize on the local talent and the local strengths of the organization. And then the last one there, of course, is greenfield. So in terms of risk, I would rank this maybe slightly above exporting as a mode of entry. But it is a much more slow and a much more tedious process. And given the COVID environment, I think this particular process has become even slower because it's become more difficult to travel to the neighboring countries. Having said that, it is a more measured way of entering the market, and you can pace this depending on your company's capabilities as well. Okay, so before you start considering expanding overseas, we'd like to share really these 3 very critical steps that need to happen. Please consider these as a checklist. We have seen companies that have seen an opportunity, are quick to rush in, but they're unable to sustain that growth and that momentum in a lot of the markets. So really, then you're adding on cost and you're adding on risk. So these 3 steps are very, very important. The first one being really understanding the market that you're getting into and assessing the match between your company capabilities and the target markets. This really means assessing whether there is a demand for your products. It also means understanding the local workforce or the local infrastructure that's going to be available, because on a sustained basis, you do want to be able to enter the market and use the local resources there. And of course, local laws and local regulations can be quite different from Singapore. So having a very good understanding of what the company would be able to do and not do, I think, is very, very important. Step 2 really is market immersion. Well, in 2019, this was the relatively easier part, and it basically involved traveling to the market. It's become a little bit more challenging, to do on a virtual basis, but it is something that's now become the new way. We are seeing a lot of business matching events, a lot of webinars, and that is, well, it's not a perfect substitute, but it is a fairly good substitute for you to immerse in the market. Trying out pilot projects is another thing that we're seeing a lot of companies do as well. And you're able to confirm the data that you're seeing from your research, which basically happens in step 1. And then step 3, of course, before really setting up, doing the administrative steps and setting up presence, is to have an established network of partners. And some of this happens in step 2 as well. Across the Southeast Asia region, we see the need for local networks and local presence as very, very important. In fact, it becomes the critical success factor in many cases. So establishing those contacts before you go and enter into the market and start taking on risk from that market, it's very important to have those connections there. So it helps you address the work cultures and the language barriers and all of those as well. So we'll talk a little bit more about these steps. So step one, this is where you as a company would basically need to do market research. A lot of this market research would revolve around customers, identifying what the profile is, who you're going to be selling to, who's going to be receptive to your product, and their willingness to pay the price that you're expecting to charge. Having that done adequately can mitigate a lot of the pain and a lot of the adapting that you have to do later on as you go into the market. The second area there, of course, is looking at the competitor landscape. And there is some basic research that you could do to figure out who are the other players, but it's very important to map out the competitive matrix. And what that really means is to map out what positioning the other established companies have in this market that you're about to enter into, and figuring out where you'd be able to differentiate. And if you don't see an opportunity for you to differentiate, then you're basically competing on price. And that can be challenging for a company with costs in Singapore. So, understanding the competitor and understanding the customers is very, very critical. And that really points to you on what the business plan and what the offering needs to be. It also helps in many cases to convince senior management or your fund providers on your plans and to get that support. Once you've understood the environment that you're going to be operating in, it's really also good to understand the resources that you will have. So the workforce is something that needs to be looked at. Things like salaries, also in terms of regulations, and that's really point C. One of the critical things that companies also assess is how easy is it to exit from the market, and you want to be aware of that. In countries like Vietnam and Indonesia, exiting can be a challenge and can be rather expensive as well, or scaling down can be something that's very tedious. So in an environment, in this rather unpredictable world, it's important to have that knowledge as you go into the market as well. Okay, so step two, we were talking about immersion. There are, as I mentioned, a lot of local events and a lot of webinars. So tuning into these, I think, becomes very, very important. You may or may not find that some of these are rather basic, but they still provide a very important avenue for you to network with other companies. In most of the countries, there are trade associations that focus on developing the creative industry or certain industry groups as well. So it's very important to tap into those. And actually, here at Spire, we do a lot of business matching events or virtual events, and we're happy to talk to you about more about those or invite you for those as well. And really, what immersion does is not only start to build the connections that are very critical in step three, but also helps you get a more intuitive sort of a sense of the market, apart from really what the data is telling you and what the consultants are telling you. Okay, and then of course we have step three, which is really finding the right partners that can open the doors. We have found that in Southeast Asia, while Singapore and a lot of the overseas, or I'm going to say companies that are in more developed markets, there is a very strong brand affinity for these countries, but most customers still prefer to deal with somebody local. And we see this in Indonesia, where while most people claim to speak English, they much rather do business in Bahasa. In Thailand, of course, there's a very explicit language barrier. So having local people there is quite critical or at least having local partners that can open up the markets for you, that can open up the doors, is still very, very critical. Okay, so what I want to do in the next section is really share some numbers with you about some of the Southeast Asian region markets, and really talk to you about what are some of the opportunities and some of the risks that we're seeing in this in these markets going forward, or last year and going forward. And hopefully that will sort of give you some idea about these markets. Okay, so if we look at the region as a whole, this data comes from the Singapore Business Federation. It's a survey that spans across, well, close to about 1,000 companies in Singapore. Singapore Business Federation takes the sample out of about 24,000 companies in Singapore. So, you know, it's a fairly good representation. And we can see here what these companies are thinking about overseas. So if you look at the markets that most Singaporean companies are exploring, you know, you'll see China, but we'll talk about Southeast Asia region today. 65% said that Malaysia would be the destination for them. 52% said that Indonesia would be the destination for them. And then the next two countries that come up is Thailand and Vietnam. Also, I think it's important to note this, 84% of the companies in Singapore are already engaged in some form or the other within the ASEAN market. So, you know, a lot of the companies are already tapping into the regional opportunities that we're seeing here. Okay, so the top four countries that sort of came out of the SPF survey are really Indonesia, Malaysia, Thailand, and Vietnam. And what I want to do is maybe just share with you these 7 data points, and you know they paint a pretty good picture about the population, how their GDP per capita is, what their GDP growth is, e-commerce penetration, which has become increasingly important now because a lot of the business now has moved to online in these markets as well. In fact, in these markets to a greater extent than in Singapore. I wanted to share the GIPC Index, which basically looks at intellectual property. So it gives you a good sense of how secure your IP would be in these markets. And you know, the risk of piracy and the risk of copying and duplication and counterfeits it sort of comes from there. The other area that I want to talk about is just ease of doing business. So this metric really takes into account how easy it is to deal with the government. To some extent, it looks at corruption, bureaucracy, how easy it is to hire, to open bank accounts, and your general day-to-day operations as well. So it's a global index, and I'll share some data on that, and I'll highlight what some of the key sectors are as well. So without further ado, let me start off with Indonesia. Indonesia is, well, the largest population in the ASEAN region, but also it is fairly urbanized. So 56% of the Indonesia population already lives in cities. A large chunk of this actually lives in Jakarta and the neighboring cities. So that the market is fairly concentrated geographically. In terms of total GDP per capita, it's significantly lower than Singapore. So Singapore GDP per capita is 58,000. Indonesia is only at about 4,000. Having said that, there is a fairly healthy base of customers that span, or consumers that span across different socioeconomic classes. So to write off Indonesia as, well, relatively lower income than Singapore would be a huge mistake. In the last year, Indonesia has been relatively resilient to COVID. There have been lockdowns. In fact, we're seeing a surge right now in Indonesia as well. But business to a very large extent has continued. Partially this is because Indonesia has started to move towards electronic manufacturing. Digital economy is something that's booming in Indonesia. So with COVID, the impact has been that the economy shrunk by about 2.1%. And that's not terrible. If you contrast that to Singapore's economy is expected to have shrunk by about 5.4%. So Indonesia is relatively resilient there as well. E-commerce penetration in Indonesia is very high. It's at 87%. So 87% of the population is already making transactions online. One of the problems does remain, and that's your GIPC index. So corruption continues to be quite a challenge in Indonesia. And the gray market is something that needs to be grappled with. In fact, out of the 53 countries, Indonesia ranks quite low. It ranks at about 48, compared to Singapore, for example, which ranks 11. Similarly for ease of doing business as well. So the Indonesian government structure is such that there's a lot of power that's delegated out to, or power is decentralized. So there are a lot of cases where, depending on your geographic rules, geographic location, different rules would apply. In fact, one of the problems with Indonesia is that there's a lot of confusion on which rules to follow, and that opens up to opportunities of corruption. So, that is still a challenge. Having said that, if you're looking at e-commerce, digital marketing, fintech, these are areas that are really booming in Indonesia. In fact, in terms of usage, Indonesia is Indonesians are one of the largest spenders online, or largest users of e-commerce. In terms of the more established sectors, there is a lot of machinery production and electronics that happens in Indonesia. Indonesia is an important part of the global automotive supply chain. So a lot of the auto parts are made there as well. And, tourism historically has been an important part, but it's of course taken a hit in the last year or so. But really the next frontier for Indonesia seems to be sectors like fintech. Startups are booming in Indonesia. In fact, it's one of the healthiest bed of startups in the Southeast Asia region as well. The Indonesian government is in the final stages of formalizing cybersecurity laws, use of personal data and things. And I think that has led to a lot of facilitation of the growth of the digital economy and startups. Okay, so let's talk a little bit about Malaysia next. Largely, it's an urban population. 77% of the population is urban. It's higher income compared to Indonesia. So, GDP per capita is about 10,000 USD. Of course, still significantly lower than Singapore, but Malaysia has had relatively good synergy between Singapore and Malaysia. And we were talking about the need for local partners. In Malaysia, that need is probably the lowest, but in the other markets, it's absolutely critical. Malaysia has, to a very large extent, been reliant on global supply chains. So electronics is a healthy sector in Malaysia, but also largely that comes from the automotive sector. Also petrochemicals, oil refining, that has been a very important hub. And with petrol prices, falling, it's been tough times for the Malaysian economy. In fact, in the last year, the economy, and given COVID, it's shrunk by about 5.6%. So Malaysia has seen somewhat of a slowdown that's happened. Having said that, e-commerce is something that's very well established, and you see that again. 83% of the population is already transacting online. GIPC Index is better, so there's a little bit more established rule of law compared to Indonesia. And ease of business, while not as streamlined as Singapore, it's still easier to set up and operate a business in Malaysia. You can see that from rank 12. So lesser bureaucracy than what we saw in Indonesia. In terms of what might be the growth areas, so we're seeing a lot of opportunities in content creation that's happening in Malaysia. Electrical and electronics, of course, continues to be a very important sector. And we're seeing a lot of opportunities in the education sector, in edutech in Malaysia. So these are pockets that we're going to be seeing growth in the next coming 3 to 5 years as well. Okay, Thailand. So Thailand has about half of their population that lives in urban areas. Bangkok is really the main hub, but we also see pockets in Chiang Mai, in Phuket. So we are seeing some decentralization in some of the cities as well. Thailand, one of the unique things about Thailand is that despite some of the political turmoil, business continues to grow. So a lot of that political turmoil doesn't tend to spill into things like manufacturing and business services. Now, having said that, last year the economy shrunk quite significantly. See, Thailand basically is very reliant on tourism, automotive sector, and the food sector. So these three sectors really drive the economy. Now, tourism, given COVID, virtually disappeared. The automotive sector has been slowing down historically, and we're seeing this across the Asia region. So, Thailand sort of suffered that, and it was exacerbated by the COVID situation. F&B still continues to be one of the healthier and stronger sectors there. So overall, there was a shrinkage in GDP of about 6.1%. So out of the countries that we're talking about today, Thailand actually saw the largest impact from COVID. Having said that, the Board of Investments, which is the trade promotion arm of Thailand, is exceptionally pro-business and sort of relatively easier to deal with as well in terms of our experience. In terms of GIPC Index, so Thailand ranks lower than what you saw for Malaysia, a little bit better than Indonesia, but corruption and protection of IP is still somewhat of a concern in Thailand. So it's 45 out of 53. And ease of business ranks at around 21 as well. And this is something that the government has been trying to improve. So this ranking has been creeping up, but the challenges still remain. Key sectors, as I mentioned, so automotive, tourism, electronics, agriculture, and finance have been areas as well. But we are seeing fairly robust growth in areas like food processing. Medical and healthcare has become a very big priority for Thailand. So we're seeing a lot of that happen as well. And, digital technology, as we've seen in the other regions, is something that's big. Gaming is something that is quite big in Thailand, and seems to be, Thailand is one of, or competing to be one of the hubs for gaming and game development as well. Okay, the last market that I wanted to talk about is Vietnam. Vietnam In terms of urbanization is relatively lower than the three that we talked about. Most of the urban activity is focused in Ho Chi Minh, Hanoi, and Da Nang is the new coming hub in terms of urbanization. Also, smart city programs are happening around Da Nang. GDP wise, it's per capita, it's about 3,500. So relatively lower. But again, there are very significant pockets of growth that we're seeing there. Vietnam was the only country in the region that didn't shrink, where the economy didn't shrink in the COVID 2020 year. It's been fairly resilient to COVID as well. So number of cases and things have been relatively small. They've been able to control the situation exceptionally well until recently. So we've seen a little bit of surge that's happened very recently, and partially cities have closed down. Ho Chi Minh right now is has social distancing norms. Hanoi, on the other hand, to a very large extent is operating with some measures, but largely it's business as usual. So there's a lot of promise there for Vietnam. In fact, it is considered as in 2021 also as one of the fastest growing economies. Now, Vietnam, the big trend that's happening in Vietnam is this trend of privatization. So the government, to a very large extent, and I'm talking about maybe 4 or 5 years ago, controlled most businesses. Most large conglomerates were owned or controlled by the government. And until recently, or recently, Vietnam has become a lot more open for business and a lot more open to private companies growing and a lot more of FDIs coming in. In fact, we're seeing a lot of Western companies as well as Japanese companies start to enter Vietnam in a very aggressive way as their alternative to China, where I think it's becoming increasingly competitive to do business. E-commerce penetration is at around 78%, still very high, and this is something that's also growing in Vietnam. In fact, Vietnam is investing a lot on their IT infrastructure, as well as regulations around cybersecurity and interacting online. So, this is really set to grow. The GIPC Index is still low, so it's 41 out of 53. So those challenges remain. But ease of doing business, I think, is something that is still a challenge. So dealing with the government in Vietnam can be rather tedious, and it's very important to have local expertise that can do that. So company incorporation, for example, can be quite difficult. In fact, there are forex laws that also can be quite restrictive. Historically, the main sectors for Vietnam have been agriculture, textile, electronics. The new economy is something, as I mentioned, is really growing. Vietnam is taking Industry 4.0 and also Agriculture 4.0 very seriously. So sustainability has become an important topic and an important theme in Vietnam as well. Okay, so I'll quickly go through this table, which elaborates a little bit more about how what are some of the boundaries around what companies can do or foreign companies can do. So for most sectors, foreign ownership is allowed pretty much across the board. In Indonesia, Thailand, and Vietnam, there are certain conditions on the size of the company or the size of the investment, but it is relatively open. So we see the minimum capital that's required. So so while foreign companies can go in, having a local partner or a local representative is still critical, and you see that here. So Indonesia, you need a local partner. In Malaysia, you need one. In Thailand, you don't, but it requires a higher capital, and the same goes for Vietnam. It requires a higher capital investment to happen. Also in Indonesia, if you're going to set up a company, then a physical address is very, very critical. In Malaysia, Thailand, Vietnam, there are workarounds, and it's not a mandatory requirement. Local licensing, local approvals with the government are required. In fact, central government and the provincial or the state government, both would play a role there, which makes the process a little bit tedious. In terms of currency controls, I think most of these companies do stipulate that business done locally is done within local country with local currency. I think Indonesia has a very strict law on that, but it is relatively easy to actually repatriate funds as well. IP protection. So I mentioned that all of these companies have fairly good, stringent IP laws. In fact, all of these countries are coming up with or have come up with cybersecurity, internet laws as well. But implementation is something that remains quite problematic. Before I move on, I'll talk a little bit just about taxes. So in Indonesia, the tax rate, and taxes can be higher in Indonesia and Malaysia. So you've got 22% in Indonesia. In Malaysia, it's 24%. In Thailand and Vietnam, it's 20%, very similar to what we have here in Singapore. But VAT differs a little bit, and it's a little bit higher in most of these countries, except for Thailand, where it's similar to Singapore. As you approach market entry or setting up presence in these countries, it's very important to look at the government incentives. So not only are there grants and incentives that companies can avail of in Singapore, but there are programs in each of these countries that invite investments, and tax holidays is one that's very, very common. Also, in all of these markets, you do have special economic zones that offer further tax holidays and subsidies on some of the infrastructure costs and things like that. So very important to look into that as you go in. And all of these are members of ASEAN. So most trade-related taxes and duties are actually they're virtually non-existent. Okay, so speaking of grants, just very quickly, I wanted to list out some of the grants that our clients look into. So the MRA grant is something that helps you to mitigate some of the market expansion activity, in the initial stages. So some of the research costs and promotion costs can be mitigated using the MRA grant. If I remember correctly, it's about $20,000, up to $20,000, or 70% of your costs when you're working with consultants or agencies can be mitigated. The M&A scheme is when companies are going through an acquisition process. You can get up to 25% of the value that you pay as tax deductible. The IGS scheme is a preferential tax on revenue that you would get from your overseas expansion. So the tax rate is 10% rather than 20% for the revenue or the profits that are made from overseas expansions. And then you've got an e-commerce program, which basically, again, has become very, very prominent. It basically helps you gain online presence on the various e-commerce channels in these countries. And lastly, we've sort of shared the link where you can look at SG Enterprises grants there. Okay, so I'm reaching the end of the presentation here, but I wanted to sort of start wrapping up with this 3-level decision matrix. So once you start exploring overseas expansion, The SG Enterprise website has a great internationalization toolkit. So it's in the form of a survey that asks you about your company history, what your operations are, what your knowledge is about the companies and your plans. And it gives you an assessment on how ready you are. That then goes into the pre-entry assessment. We spoke about this, the market research, understanding your customers, competitors, and regulations, and then immersing yourself in the market and starting to build a local network. And then the third area is really making that decision on which mode of entry you'd want to go in and start sort of doing the groundwork. Okay, so lastly, I wanted to just share with you a very recent project that we've done. It's with a company called Billion Bricks. This was under Design Singapore's Scope and Frame program. We worked with another company called Tangible, which is a marketing consulting firm. And Billion Bricks basically is an organization that is building social housing or economic housing where the roof of the housing is fitted with solar panels. So the energy generated by the house helps generate some revenue for the people that live in the house. And to a large extent, this is low income group. And also sort of feeds back to energy to the grid of the local city or the local community. So it's a mix. It's a very interesting design. It's a mix of social housing with energy, with solving the problem of homelessness or low income housing. Billion Bricks basically wanted to start off a pilot project in Philippines and then go from there and really build up the Billion Bricks brand across the region. So our role, along with Tangible, the partner company that we work with, basically had to assess the feasibility of the housing project as a start. Also look at which sites are going to be suitable. So that they'd identified 4 sites, and we evaluated which sites would have the best business case. And then, of course, figuring out, as was the case in step 1, who the target customer would be, what need to be addressed, which segments to go after, and then coming up with a value proposition and a pricing model. So what we did with Billion Bricks was a 4-part process. So we started off and we looked at the locations, and we spoke with the local residents there. We did quant interviews, potential customer interviews, as well as looking at published data. And we helped them basically identify which site made the most business sense. We then went in, and because this was housing, we investigated what the customers wanted. So what our project did was inform their design decisions. So should it be a 2-bedroom? Should it be a 3-bedroom? Should it be 2 stories versus 1 story? What level of furnishing would they like, or what the layout needs to be, and what design elements need to be put in. That sort of happened in part 2. Also, we looked at what people thought of, or what people expected, the customers expected from a brand that was offering this product. In fact, for Billion Bricks, we showed potential buyers the concept and really did a market test on receptivity. Part 3 then was, well, now we understood what the market needed. So ideation on what are some of the alternatives for them, not only to build the project, but also to build the Billion Bricks brand, starting off with Philippines as the first step. And then part 4 really was where we gave in our recommendations on which ideas they should be prioritizing, what model they should be going in with, what the offering should be, and what the implementation needs to look like once the construction is underway and it started. Yeah, so I'm happy to talk about this more if you have questions. And that brings me to the end of my presentation.
Thank you, Japneet, for bringing us through this insightful presentation. We are going to move into the last segment of the day, which is the Q&A. There are some questions that are coming through the chat, and if you have any other thoughts from today's sharing, just feel free to keep them coming through the Q&A chat function. So let's just jump into the Q&A session. Okay, so Japneet, the first question that we have is, what is the local graphic design expertise level in these countries? Should we should we bring our experts or hire local?
Uh, well, it differs a little bit, but let's talk about Thailand and Indonesia. Now, both of these markets have a very, very vibrant creative industry, and the skill levels for graphic designers is quite high. In fact, in some cases, I've been quite pleasantly surprised when we've seen our clients work with some of the local designers. The question on should we be working with Singaporean designers or like design staff, or should we be working with the in-country designers? There is an argument for local knowledge and local understanding. As you're dealing, depends on whether you're dealing with local clients. So there is an argument that says that local designers might have a slight edge. But then when it comes to technical skills, then I feel that Singapore is at a stronger position. So it really depends on which market that you're catering to. Singaporean designers, I think, have a more global orientation, but there is a lot of very high skilled labor that exists, especially in Thailand and Indonesia.
Thank you, Japneet. I think it's very useful information for our design firms who are attending this webinar. I think let's proceed to the second question. Okay, the second question is, how will Singapore companies entering this market compete with existing design firms in foreign markets, given that the cost of living and labor is cheaper?
Yeah, so that is a challenge. So I think it's very difficult for Singaporean companies to play in the price positioning sort of an arena. Having said that, I think Singapore still enjoys a very strong brand in terms of quality, technical capabilities, innovation. So I think Singaporean companies can use that to mitigate some of the price sensitivity. Also, I think Singapore companies can position themselves as facilitators for regional or global growth. So, which is when you'd want your clients to work with Singaporean companies. If you're looking at a global brand, then let's work with Singaporean companies. If you want to stay local and you're designing for local, then maybe the local companies and the cost advantage sort of comes in. So there are a couple of value propositions there already. And then, of course, it really depends on execution and what the companies are doing.
So thank you, Japneet. There's just another question which is related to the earlier question. So so are the local businesses more open to local design brands or foreign design brands?
We're seeing a shift in the market. I think we are seeing a shift where consumers are now shifting back to local brands. So if we had this conversation a year ago, I would have said, well, the global brands and the international brands, still trump. But we've started to see a shift where, well, I don't want to say local brands, but probably localization of brands has become very, very important. Even if it's a Singapore company, to localize that brand and offer local design options is something that I think more and more customers have started to go down that path.
Useful information, Japneet. So I think we can, the next question, it's more about Spire Research. So has your company assisted any design related Singapore firms expand into Southeast Asia countries? If so, what are the type of companies? And can you share some challenges that they might have experienced while entering other markets? Then there's another part to the question. So maybe you want to take these two questions first?
Sure. Well, I think the billion bricks example that I just spoke about. So this is, it's an architecture firm or a house design firm / product design firm that is addressing homelessness, or in some cases it's portable homes, but in the case of Philippines, which is where we're helping them grow, it's really sort of coming up with a housing community and then building their brand as a developer, as an ecological social developer. This is a project that we've done very, very recently. In fact, we're just wrapping that up. In terms of the challenges that we see, well, I think lack of good, reliable data for decision making continues to be a challenge. This particular project was in the Philippines, and Philippines, this is a unique problem, but we see this in other countries in the region, Indonesia, Thailand, as well. So there's that. Also, a huge dependence on local networks is something that's going to be critical. So having local staff, and this company that we worked with eventually started to grow their local team in the Philippines, I think is critical also.
So, I mean, apart from all these weaknesses that you've seen, I mean, what are other strengths that you think the companies that you work with, as well as Singapore companies have in these Southeast Asia markets?
Well, so, I mentioned, well, these markets in terms of opportunities they're more larger, they're more diverse, they're more vibrant. If we've got good ideas that can be effectively localized, then there's a clear opportunity for Singaporean companies. Also, when you're working, and that's here I'm talking about Singaporean companies selling to local consumers. When it comes to B2B and Singaporean design firms trying to sell to local businesses, then sort of Singapore brand, Singapore's ability to protect IP, and just a global know-how. I'm going to throw in one more, which is technical skills. These are sort of strengths that Singaporean companies can actually go in with.
Okay, so there's another related question to what you said earlier. So, what is the focus on these 3 Southeast Asia countries in particular? Any thoughts on other regions such as China or Europe?
That's an interesting. So a lot of the work that Spire does, our focus is on the Southeast Asia region, which is why I'm sharing this. I think the other market that is very prominent, very popular among Singaporean companies is China. So we're seeing a lot of growth there. Japan, we don't see as much in expansion happening. I think it's more of the other way around. It's Japanese designs, Japanese companies and concepts coming into the Southeast Asia region. And again, Europe. So I'm sorry, we don't do so much work in Europe, but it is a lot of the growth is happening in this region. I mean, despite all the negative numbers that I was showing you, there are a lot more opportunities for growth here in the Southeast Asia and Asia region as compared to Europe. I'm sorry, I haven't been able to answer that question.
No worries, but it's good to know that, I mean, there's a lot of growth for design firms in Singapore to, expand in the countries that you actually referred earlier in your presentation. So, so what would be some typical mistakes that people tend to make while entering a new market? I think this will be very useful for our design firms. Yeah.
Okay. In my company, because of our parent company, they do a lot of joint ventures and a lot of mergers and acquisitions sort of projects. And we've basically seen where in these cases, the plans can be quite elaborate, but the integration of 2 firms doesn't happen. That's sort of one mistake that we've seen. And it comes down to being able to work with local staff and local customers and having sort of basically localization of your acquiring brand or acquiring company. When that doesn't happen effectively, we've seen sort of disastrous results. The other one that I think I will highlight again is related to understanding the local customers. So one of the mistakes that we've seen Singaporean companies make is going in with the fallacy that they know the market or that they know better than the market. So, oh, we're going to go in with this brilliant Singaporean design. It works really well here. Or, we've seen it with food, for example, and we'll go in and we'll change customer behavior, and we will be able to influence them and convince them into using our products. Doing that without having a very good understanding of the customers and that flexibility that the company would need to localize to the market rather than the other way around, that has been a challenge, and it can lead to very, very slow or no customer acquisition. And increasingly, this has become more and more difficult. It's become more difficult to convince local customers to buy products that don't fit with the local tastes. That whole internationalization, westernization, if you can call it, it's losing its charm in the recent couple of years.
Okay. Since we just have a short time, so we'll just quickly take the last two questions, Japnit. So the second last question would be, could you share a bit about what type of Singapore-based organization could have to bring the expertise to, could you share a bit about what type of Singapore-based organization have to bring what kind of expertise to interested companies into overseas market?
Oh, I think we're seeing, well, that's a tough one. I think, let's say Indonesia. So we see this vibrant startup hub coming in. So I think Singapore going in with global access and of course funds is something that I think is a nice match. The other areas around market testing or commercialization of certain designs, I think is another opportunity where Singapore companies would have a greater access globally or regionally to the market compared to some of these smaller local firms. Yeah, that's sort of the two that I can think of.
Thank you so much. And this last question is based on your experience. So how well do Singaporean architecture practices fare in terms of expansion in ASEAN region?
Interesting. So I'm just reflecting, if you can give me a minute, I'm reflecting on some of the conversations that I've had. Being an architect, I have somewhat of a perspective because I end up speaking to a lot of the architects that are working here. I think there has been an avenue where Singaporean architectural firms have worked with local developers or international developers, and they've brought in the Singaporean brand, if you will, into the value proposition. So the fact that you're a Singapore company has helped win projects, but it comes at a very big cost because I think that one of the questions earlier was, well, it's so difficult to have an office. It's so expensive to have office and staff and designers being based here. So we've also seen these Singaporean companies start to offshore some of the design work into their local country offices. So one of the firms that we were interacting with very closely was doing projects in India. It was a Singaporean company, Singaporean brand, architectural firm that was winning the projects, but a lot of the design work was happening in Thailand, or increasingly started to move to Thailand because of cost pressures. So that's the kind of thing that we're seeing. The Singapore brand is important, but it's very expensive to maintain all of the infrastructure here.
Thank you so much. And then there's one last question that just came in. I hope you can take it.
Sure.
So, any suggestions on how people can approach culture fit between two companies across two different markets? And any pointers on doing this for the C-suite and the actual operation teams?
Ah, um, as far as possible, my my recommendation, and this is in some cases it's feasible, in some cases it's not, is to hire local, to have local teams. I think is very, very critical. Apart from that, I think facilitating as much interaction as possible with senior management, and that could be one culture, with the working level staff is another one. In fact, I mean, I would argue that used to be tougher to do in the past because you had to travel. But now, using platforms like Zoom, you could argue that it's actually become easier for senior management to spend time with the local staff. And on both sides, on both the management in Singapore and the local staff, they've both learned how to do it digitally now. I think that has to be accepted. So I think it's become easier rather than more difficult.
Thank you very much, Japnit, for the engaging conversation and taking all the questions. I hope you enjoyed today's webinar, and we'd like to thank you for joining us this afternoon. Should you wish to revisit today's discussion, a summary of the keynotes will be shared with you via email, along with the relevant links on how you can reach out Japnit. Um, Please help us with a post-event survey, which should appear on the screen now as the leftmost QR code. The presentation slides will be shared upon the completion of the post-event survey. And if you are a Singapore designer or if you are a Singapore designer or a design enterprise registered in Singapore, interested to find out more about DSG's support and programs for the local design industry, feel free to approach us via our email address, industry@designsingapore.org, which is the rightmost QR code. And also, we'd like to take this opportunity to thank Japnit for the wonderful sharing today again. And to all attendees, we hope you found the session inspiring and meaningful. We hope to see you at our subsequent events. Thank you and see you soon.
Thank you. Bye-bye.
Thank you.